We just wrapped up one of the worst months in the history of Bitcoin. We were down 36% in the month of May 2021, which was the third worst month ever, only behind November of 2018 when the price of Bitcoin dropped 37%, and behind 2011, September of 2011, when the price dropped 40%. So this was the third worst month ever. Many people are now wondering, what's next? Are we going to see crypto enter a bear market? Are we just going to stabilize and then recover and see another, like a double pump scenario? Or are we just going to bounce right back and go into another bull market? So today's video, we're going to break down a couple of key things going on right now in the crypto space with Bitcoin, Ethereum, some altcoins. We're first going to go over some indicators with a bull and a bear market. After that, we're going to go over JP Morgan. They had some important information on Bitcoin, Ethereum, what institutional investors are doing. After that, we're going to go over some contradictions that I found doing a deep dive into some of the analytics on what is going on with Bitcoin and how it contradicts some things that JP Morgan is saying and why I found this a little bit confusing. And at the end of the video, we're going to go over a couple of key indicators that are showing us where the crypto market's going to go over the next couple of weeks and the rest of 2021. So make sure to stick around until the end. If you want to skip ahead to any portion of the video, I will put timestamps down below. So make sure to like the video down below, subscribe to my channel, helps out a lot. For those of you who are new here, the whole reason why I created this channel was that YouTube did delete all three of my YouTube channels with about 300,000 subscribers. Fortunately, I did get those back right now, but I wanted to create this channel to show that you can start from zero, no matter who you are, no matter if we're talking about investing, you're talking about a job. If you're knocked down, the underdog, the little guy can succeed. The only way you're going to lose is if you give up. So if that mission resonates with you, then please be sure to subscribe to my channel. But anyways, Bitcoin just logged one of its worst months ever. The month of May 2021 was its third worst month ever with a drop of 36%. It started off the month of May at $57,829 per coin, finished the month at $37,341. It did bounce back. At one point, it was as low as $30,000 per coin, but this is the third worst month ever, only behind the 40% drop we saw in September of 2011 and a 37% drop that we saw in November of 2018. This was the third worst ever. Right now, the crypto market is up a little bit over the last 24 hours, which is a good sign, up about 0.89%, pretty stable, but still up a little bit. Bitcoin's price is down 2%, Ethereum's down 2.3%, but really where we're seeing these gains are coming from some of the smaller altcoins, like Cardano's leading the way, up 3%, Dogecoin up 5%. We're seeing Stellar up about 7%. So some of the more popular and smaller altcoins are doing a little bit better, driving the main gains we're seeing in the crypto market right now. But for the most part, we're seeing everything pretty stable. Anyways, right now, like Ethereum, Dogecoin, some of the smaller altcoins are surging a bit. They're driving the gains we are seeing in the crypto market today. And according to chief market analyst at AvaTrade, he said it seems like right now everything in crypto is really just hanging in a sort of hanging and holding pattern. We have seen crypto prices stabilize over the last couple days. We've done lots of videos on this. Bitcoin's price has stabilized between that $40,000 per coin range ever since we saw it drop to as low as $30,000 per coin. We have not seen it drop that low again. We have seen it touch 33,000, but it has not dropped as low as $30,000 per coin after we saw that initial crash, which is a good thing. We're seeing prices stabilize. You can see over the last month, we are really bouncing between almost even $35,000 and $40,000 per coin. Same with Ethereum. We're seeing everything level off and really in a hanging and holding pattern. But according to this analyst, chief market analyst at AvaTrade, he said that the upward momentum still looks like it lacks any major backing, and that is a problem right now. So he basically says unless we see Bitcoin's price cross $40,000 per coin, break it, stay above that for a couple of days, and then eventually break the $50,000 per coin range, it's unlikely that we're going to begin another major bull rally, because right now we have seen it touch $40,000 per coin a couple of times recently, but has not been able to sustain that break and remain above $40,000 per coin for a while. And until we see that, we're really just going to be in this sort of stabilization holding pattern that we're seeing right now. And in addition to this, Kaya Parv, head of investment research at the trading platform, he told Yahoo Finance UK that Bitcoin and correlated crypto assets may have found their bottom already, as there seems to be bullish price action this morning in, the beginning of June. But he said, having said that, right now, it's a lot of technical indicators are a bit shaky. We are not exactly sure where the crypto is going to go, just because we are just in that uneasy phase right now. We are hanging on between $35,000, $40,000 per coin, but we have not yet had a sustained break above $40,000, which will be important, and if it were to happen, would be a great sign for things to come. Overall, though, Deutsche Bank explained how cryptocurrencies were the biggest losers in terms of assets in the month of May 2021, and this volatility may make some institutional investors, some regulators, a little bit uneasy about putting money into crypto and making it, pushing for more widespread adoption of it. And finally, last thing before we get into JP Morgan, WisdomTree. An exchange-traded fund and exchange-traded product, they announced that their physically backed Bitcoin and Ether ETPs have listed on Euronext exchanges in Paris and Amsterdam. This is a big deal. They have a couple of Bitcoin and Ethereum ETFs that are already set and applied for approval in the US, but obviously right now, no Bitcoin, no Ethereum ETFs have been approved in the US, but we are starting to see more and more countries accept and list ETPs, ETFs for Bitcoin, Ethereum, other altcoins, and that is happening in other countries, and I think that will be a good sign for the US to follow suit very, very soon, because right now we've seen Canada have Bitcoin, Ethereum ETFs. We're seeing a lot of ETPs for like Cardano, Stellar, Ether, and other cryptos in Europe as well. So with all of this action going on in other countries, I think it will be a bit of a push that US regulators need to get some of these passed in the US, and once we see that happen, we will see billions and billions of dollars poured into different cryptos, which would be a good sign moving forward. But either way, with WisdomTree having their ETPs and ETFs in Europe being officially approved and listed, that is a good sign for things in crypto, that a sign that things are here to stay. Crypto is not going away, whether we're talking altcoins, Ethereum, Bitcoin, doesn't really matter. All this is here to stay because more of the big money players are starting to get in. And now let's talk about JP Morgan. So I read this report this morning, and it was pretty interesting because what JP Morgan said is they said big investors are not buying the Bitcoin dip. Prices could fall further, and they're saying that institutional investors have held off so far in buying the dip. And this was a little unusual. This contradicts some things that we went over the other day, which we'll get into later, but it makes me wonder why. Why are they saying this when a lot of other data that we've been talking about, a lot of other data that's come out, has said otherwise? But either way, what they're saying is that institutional investors have held off so far in buying the dip. They're saying Bitcoin funds continue to see outflows while gold exchange traded funds continue to see inflows. So that really means that we're seeing some of the big money players, institutions, taking money out of crypto, out of Bitcoin, moving it over into gold. And you can see from here, this chart does show that we are seeing the amount of money going into Bitcoin declining and money going into gold ETFs increasing. So we are seeing that, and it makes sense, with Bitcoin and gold. A lot of institutions, they treat them in similar aspects. They're not exactly the same, but they treat them in the same sort of sense. So it would make sense that we see money coming out of Bitcoin going into gold, because they do try and treat them as a way to hedge against inflation. But either way, right now, JP Morgan predicts that Bitcoin will trade between $24,000 $36,000 per coin range in the medium term based on volatility ratios, what's going on. I think that's pretty bearish. I don't think we're going to see Bitcoin drop as low as $24,000 per coin. If we do, then we would officially enter a bear market. But in my opinion right now, I think we will stay above that $30,000 per coin range and could potentially break that $40,000 per coin range in the coming weeks. But either way, the way I think about it, the way I've seen it, looking at the charts, analyzing everything, if we break below $30,000, then we've really entered a bear market. If we're able to break and sustain a break above $40,000, then we would be entering a bull market. But either way, they explain that in the medium short run, They think that we're going to go as low as $24,000 to $26,000 per coin before longer term momentum would signal another run. And so that's what's going on right now. They're explaining with Bitcoin. They do think that we will drop lower. We will drop as low as $24,000 per coin. They're explaining how institutions are getting out of Bitcoin. But this I found very interesting because the other day we spoke about how, and we read a report on how over $2 billion worth of Bitcoin was bought during the dip by institutions, by whale accounts. So this was a little surprising that I heard that analysts at JP Morgan, they said that institutions are not buying the dip, because this directly contradicts this report right here. So this JP Morgan saying that big investors are not buying the Bitcoin dip directly contradicts this report, which shows over $2 billion worth of Bitcoin was bought. And in a recent report by blockchain analytics company Chainalysis, the firm's chief economist, Philip Gradwell, explained how whale accounts bought 77,000 Bitcoin in the last week of May 2021 and in the last 2 weeks of May 2021 during that dip. Now, when they bought that, it's currently worth over $3 billion because they bought it between that $30,000 and $35,000 per coin range. So basically he explained how during this drop off, after we saw the crash down to $30,000, we actually saw a lot of institutions get in, and according to conclusions drawn by the company from its analysis of the blockchain transaction data, they explained how $2 billion worth of Bitcoin was bought by whale accounts. And this is just surprising to see that we're seeing JP Morgan say complete opposite of what the data shows from Chainalysis. So I found that very interesting. Is it because JP Morgan or some investment banks, some institutions are trying to manipulate the price? Is it that they're trying to spread some FUD? What is going on? That's all possible. That is all possible. We have seen a lot of FUD, a lot of fear going on in the market from institutions really manipulating it, one day selling off. We're seeing whale accounts sell off billions of dollars. The next day, we're seeing whale accounts buy billions of dollars. So we are seeing that, but it's just interesting to see that we're seeing JP Morgan say institutions are not buying when clearly data shows that institutions bought over $2 billion during the dip. So I found that very interesting, that contradiction, but let me know what you guys think about that. And finally, one important thing going on with Bitcoin's long-term put options is that we finally saw a key change, and it's not great. And the key change that we saw in these metrics is that Bitcoin's long-term put options saw sustained demand as price consolidates. So as we've seen the price level off between that $30,000, $40,000 per coin range, we're seeing everything pretty stable. The whole crypto market is holding strong at that 1.6, really between 1.55, 1.65 trillion dollar market cap. And what we're seeing right now is that Bitcoin's longer term puts or bearish bets are drawing stronger demand than calls for the first time in 2021. And that's a sign that the recent sell-off has taken a toll and investors are starting to become more bearish and losing confidence in crypto for the rest of this year, at least, in the short to medium term. Because according to data provider Skew, the 6-month call skew, which measures the relative expensiveness of puts versus the relative expensiveness of calls, crossed above zero on May 17th, indicating a bias for puts, and it has stayed there since then. So essentially, for those of you who don't know, a call gives the buyer the right, but not the obligations. You don't have to buy the underlying asset at a predetermined price. You could buy calls and that say, when they expire, you can buy let's say you could buy Bitcoin at a lower price than it is if the price goes up. For puts, it's the same thing. It gives the purchaser the right the right to sell the underlying asset at a predetermined price. So basically, if people are buying calls more, it means that they think the price is going to go up. Puts means that they think the price is going to go down. And this is important because this is the first time ever that we are seeing sustained prints above zero for the first time, indicating that there is a demand for puts, meaning that people think the market is going to go down, at least in the short term. We have seen a number of pullbacks over 2021. We saw in April there was a big pullback in the market. We saw a couple pullbacks before that, but this is the first time ever during 2021 that the 6-month put call skew remained entrenched in negative territory, which is a sign that people are becoming more bearish on crypto than they previously were. So this isn't a great sign for things to come, but either way, where I see it, and according to other data, as long as we see Bitcoin's price stay above that $30,000 per coin range, things are looking still pretty good moving forward. It appears very similar to what we saw back in 2013 with the Bitcoin run. We're going to see a sort of double pump scenario. That is what things are looking like right now, because a lot of long-term holders of Bitcoin are still remaining unfazed. They haven't sold off their positions, and a couple of key things that we are seeing is that long-term holders are adding more to their position, miners are accumulating more Bitcoin as well, and short-term holders are selling off. So really, people who have paper hands, people who don't believe in Bitcoin and crypto long-term, they get nervous with this volatility. Whenever there's a lot of volatility, they sell off, they get out because they don't believe in it long-term. But what we're seeing is that long-term holders, people who have owned Bitcoin for more than 155 days, are adding to their positions during this time period when we're seeing short-term holders sell their positions. So really what this means is that we see this every single cycle in the crypto market. Every time Bitcoin starts to rise, more and more investors, new investors, get into crypto who have not been in it before. And those people are the people who, aren't going to make as much profit because they just try and ride the wave. They hear about everything in the news, they get in then. But then as soon as everything takes a hit, they like, Bitcoin, Ethereum's not going anywhere. I don't believe in it anymore. And so that's what we're seeing right now, because we saw that 40% drop off in the month of May 2021. A lot of those short-term holders are scared and they got out of the market. But the good news is we are seeing long-term accumulation increase for Bitcoin. Things are looking pretty good as long as we stay above that $30,000 per coin range. I think there's a very good chance that we could see a double pump scenario similar to 2013. Really just need to break that $40,000 per coin range, have a sustained break above it, and then I think we will see Bitcoin reach new all-time highs later this year. But really, that's what's going on in crypto today. There's a lot of stuff between JP Morgan, a little bit of contradictions with their reports to what data we've been looking at recently, what's going on with Ethereum, other altcoins, and just crypto in general. So I hope you guys enjoyed today's episode. If you did, please be sure to like the video down below. Make sure to check me out on Public Investing app. I post when I buy and sell stocks there. It's free to follow me. It's just like an Instagram, but for investing. So make sure to check me out on there. But I hope you guys enjoyed today's video, and I'll see you in the next episode.